Well, Marcel, the big news out today is the Kenya's MPC's rate decision, 350 basis points. Was that an amount you had expected?
Well, there was always a bit of scope for a big cut in MPC rate. But from where I stand, it's not so much the mechanisms of it, but what it means to asset allocation. What matters to us now is really the glide path on which the MPC rates or the base rates in this market are on. And it's one that is continuously down and probably to the sort of single digits going into the end of the year.
Looking at asset allocations, like you say, looking at the fixed income market, we have seen yields are falling back since the start of July. Your thoughts on the impact this interest rate decrease will have on the fixed income market going forward?
Well, our view is very simple, is that when you look at fixed income going forward, the upside is relatively limited. What you are probably more willing to look at this stage is what the glide path, as I said, means for equities investments at this stage. We think it's going to be a gradual move into equities. We advocate that it is the right time to get into equities, even if the NSE is up almost 20% year to date. And when you look at it that way, there's certainly some good stories out there, the forgotten stories, the smaller stories, or even the sectoral stories. Mm-hmm. When you look at banks, for instance, rates coming down means that there is probably more scope for lending, which is also good for confidence overall in the market. When you look at inflation, it means that it coming down so fast means that at some point in time we may have more disposable income, and maybe consumer stocks would be the right place to look into. But at this stage, it feels that if you're buying into growth, which is spelled out by a more stable macro environment, a lower inflation, then corporate earnings are probably looking up in the medium term, and the equity market is the right place to be, probably.
Indeed, the equity market, the right place to be at this stage. When you look at the performance of the NSE 20, like you say, it's up about 25.8%. But when you look into 2013, we do have an election coming up. And when you look at that scenario, what kind of impact will the elections have on the NSE when you compare it to years before?
Well, the previous years, we have seen different stories, and if we want to look at 2013, it is likely to be a game of two halves, if you want. The pre-election game where you could see a lot of volatility, but I would not expect to see a very strong correction overall, because we are going through steps. December, I guess we would have a clear idea of who is running. Mm-hmm. March, we would have gone through the first round. And I think markets should be in a better position to actually anticipate and look through that period. And perhaps it's the right time to start picking up interesting, cheap, good assets. And beyond that, mm-hmm. Beyond that is effectively what we could label the sort of age of growth.
Looking at age of growth, and when you look at the Kenyan shilling ahead of the MPC, it fell about to a 2-month low. But looking at the Kenyan shilling right now, with this interest rate decrease, your forecast for the shilling going forward?
Well, at this stage, we were looking at a relatively stable Kenyan shillings. When you look at the reaction on the market today, it strengthened a little bit because the cut was broadly within the expected band. The issue right now isn't so much about the Kenyan shilling. It's more about what to do with those assets. And as I said, time seems ripe for equities.
Well, that's where we have to leave it. Thank you so much for joining us. That was Marcel Mballa-Ekobena. He's the head of CIB Equity Research at CFC Stanbic Bank.